watching the SYEP 10-minute tip video series. Today, we will learn about free versus not so free money with Diana Counts from Beach Municipal Credit Union. Let's see what she has to say.
Hi everyone, my name is Diana Counts and I work for Beach Municipal Federal Credit Union. We're the credit union for city employees and volunteers. And today, I'm here to talk to you about free money. See, free is one of those really tricky four-letter words because it really doesn't always mean free. I'm sure you've heard the saying there's no such thing as a free lunch. Well, there's also no such thing as free money. The problem is there are a lot of companies out there that will target you because they think you don't know any better. They don't know that you took financial management in high school and learned about credit cards and how to avoid getting into debt. They target you because they know that we want what we want when we want it, right? Let's face it, that's the American way. Sure, we could save our money and buy stuff later, but there's no fun in that, right? So maybe you want to go to a concert with your friends, when we can start doing that again. Or maybe you want to take a trip with your friends, go down to the Outer Banks, maybe go to Vegas. I know we're not doing that now either, but we will one day, and you may not have the money to be able to afford to do it right now, right? Most people under 21 years of age can't get a credit card, but don't worry. These companies will make it easier for you to get the money you need, regardless of how old you are, or really even if they think you can pay it back. Okay. One of the biggest things that we see with people in your age group are title lenders. So how does the title loan work? So let's say you have grandma's car that she gave you, and so you own this car outright, okay? You have the title. You take that down to a title lender, and how that works is they take the title and they will give you money, okay? You're borrowing money against the car. Generally speaking, you'll get about 30% of the value of the car. Now, most title loans work out to be about $1,000, okay? And you're going to borrow that $1,000 for 30 days, and they're going to charge you 25% interest. Okay, 25% doesn't sound so bad. And then there'll be also fees. Sometimes they'll charge you an origination fee or an application fee, okay, but whatever. So what they'll do is they'll give you $1,000, and you have to pay them back in 30 days. Now, if you don't have $1,000 today, what makes you think you're going to have $1,000 at the end of the month? Chances are you won't, but that's okay. They can renew the loan for you. Of course, there are fees for that, but it'll be fine. But let's talk about some of the math, okay? So if you borrow $1,000 at 25% interest, that means you're paying back $1,250 because that's what 25% interest would be. The problem is this, 25% interest, we talk about that as annual percentage rate. But if you have to pay this back in 30 days, that's not annual. So what we have to do is we have to calculate what's called effective interest rate. And that looks at what are you really paying? What's your real interest rate for borrowing this money for 30 days? In this case, it works out to be about 304% interest. 304%. That's insane. If you don't think that's insane, you can call me up and I will personally loan you money for the savings at 200% interest. But we all know that that's insane. So we don't want to pay 304% interest. But remember when I told you you could renew this because most people wouldn't have the money at the end of the month? The average title loan is renewed 7 times. And when you calculate that all out with that effective interest rate, you end up owing $1,750 in interest, and that's on top of the $1,000 that you borrowed. That's nuts. So, what are your options? Well, your biggest option is to go to your bank or your credit union because almost all of them will offer what's called an old title loan. What they'll do is, let's say your car is worth $3,500. They're going to give you more than just 30% in value. Most of them will. Some of them will even give you up to 100% of the value, depending on how old the vehicle is. But regardless, talk to them because no matter what, it's going to be a better deal because your interest rates are going to be lower. They're actually going to be annualized. because usually your term will be maybe 1-2 years, something like that. But even better, every time you make the payment, they're going to report your payment to the credit bureau, which means your credit's going to be better. So you'll still get the money, you'll build your credit, and you'll have more reasonable rates in paying it back. So that's certainly a better option there. The other thing that we see a lot of in your age group are rent-to-own. Now, rent-to-own places, I'm sure you've seen them around. They know that you're moving out of mom and dad's house, and mom and dad have some pretty nice stuff. So you're like, okay, where's my 90-inch screen TV? And they're like, don't worry, we got you covered. How this works is you pay a certain amount of money every week, every month, whatever it is, until you own the item, okay? So, for example, let's say you have a laptop that you're going to buy for $612, okay? They're going to charge you $38.99 a week for 48 weeks, and then you will own the laptop. Now, that actually works out to be, I mean, if you do the math, $38.99 times 48, that's $1,872. It actually works out to be 311% interest too. So again, insanity. And you could buy, 3 laptops for the same amount? Why would you do this? But again, it's even weirder, okay? Because rent-to-own places in many states don't have to tell you what the interest rate actually is. They also don't have to tell you if they're going to charge you any fees or even what those fees would be. Many of them don't even have a limit on what the late fees can be. So there's no part of this that seems to make sense, but people do it all the time. And again, you need to understand that people who work in rent-to-own places or payday lenders, they're not bad people. I mean, they're doing a job. There is a market out there, and they are fulfilling the needs of people who want to shop there. But there is a better way, okay? So it gets even better when it comes to rent-to-own places, because in about 30% of the states, if you are late with a payment, the rent-to-own places can actually file a warrant for your arrest. These are felony warrants because they say you're in possession of stolen property. They can send the police to arrest you because you owe a debt. And did you know this was legal in Virginia until 2014? So until 6 years ago, the cops could bust down your door and arrest you because you owed the money on a $200 TV. Insanity. But again, still legal in about 30% of the states. So you really need to know what you're getting yourself into. And yes, there's a contract, which you'll sign. Again, it doesn't have to tell you what the interest rate is or what the late fees are, but it will spell out some of the details. You got to be careful too, because some of these rent-to-own, it clearly states you're just renting it. So even when you fulfill your 48 payments, there's a little clause that says, ooh, sorry, you were just renting it. If you want to purchase it, you can. It'll just be another $1,200. I'm sorry. It actually says rent to own in the name, but okay. And hey, you signed it because you didn't read the contract. Which again, I don't think I need to say always read your contracts, but always read your contracts. Okay, here's another thing that you should consider. Okay, I understand. You want a TV. Okay. You would be better off if you put this on, find some incredibly high interest rate credit card. Let's say it's 29, 30% interest, which is insane, but okay. And you paid that same $38.99 a month, okay? You would actually save about $1,000 in interest, and you'd own the laptop in 20 months as opposed to 48 months. Even better, if you just put that $38.99 into savings, you'd be able to buy the laptop in about 4 months and save yourself over $1,200 in interest. What it all boils down to is just using your head, okay? There is no such thing as free money. Don't allow companies who think that you don't know better to pull you in. It's called predatory lending for a reason. Good luck, guys. Thanks for your time.
If you have any questions about loans or scholarships, feel free to reach out to the SYEP staff at syep@bbgov.com. As always, Click on the link below to take a quick quiz and earn some free SYEP swag. We'll see you next week as we talk about the importance of saving.